Last week, all anyone could think about was the NVIDIA quarter, although it kind of dominated today's thinking, too. So some hugely important earnings reports flew under the radar. In fact, the very next night, Thursday, we got some solid results from Dell, to the point where I think the PC maker, well, I guess it's much more than that these days, though, has become an incredible bargain. During the earlier part of the AI boom, this stock was roaring. It rallied 90% last year, then climbed another 135% for the beginning of this year through late May. However, when summer came along, Dell sold off hard along with the rest of tech, especially anything AI related. At one point, it was down more than 50% from its highs, although by the time the company reported last week, it had recovered somewhat, down 38% from the high. So going into the quarter, the key question was simple. How bad could it be? Could it be to possibly justify such an extreme sell-off? Of course, you could look at Dell's prior run and just say, easy come, easy go. But it's important to figure out if the underlying thesis remains intact. This story is all about Dell making servers for the data centers that power artificial intelligence, along with new lines of AI-infused PCs. Unfortunately, the numbers were somewhat confusing, but I think that Wall Street got this one right, at least initially, as the stock ultimately rallied more than 4% last Friday, before giving back all those gains today. Yep, Dell's still worth owning here, and I'm going to tell you why.
Don't miss a second of Mad Money. Follow @Jim Cramer on X. Have a question? Tweet Cramer. #MadMentions. Send Jim an email to madmoney@cnbc.com or give us a call at 1-800-743-CNBC. Miss something? Head to madmoney.cnbc.com.